chat? What's good? What the heck we got going on, chat? What the heck we got going on, y'all? YouTube, how we doing? Twitch, how we doing? Y'all made some money in the markets today or what? How we doing? How we feeling? How we living, huh? I'm amped up. I drank an energy drink literally 1 hour ago. Terrible idea. I'm about to be up all night, chat. Our graders did what? Market Mondays. What up, y'all? What up? What up? What up? What up? What up? What up? Chat, let's turn this down a little bit. How the heck y'all doing, Top Dog Shred Lords? Welcome, welcome, welcome. Hold on, let me get my command station set up real quick, chat. Let me get my command station set up real quick, chat. How we doing? No judging. I literally just came back from the gym, y'all. I came back to the gym like an hour ago. I had to speak on this little panel, and now I'm locked back in. Shred Lords, what we doing? And don't be looking at the market being down 0.7% and being worried. We like when our groceries go on sale out here in Chat Capital, y'all. How we doing? How we doing? Let's see. Let me see. Ondas is up. Coupang is down. UEIC, that's Universal Electronics. P-Lab's down. KLAC probably down. Yeah, KLAC's down. Ain't tripping. I ain't worried about it. I ain't worried about it. What else y'all got going on in the world, man? Hello, Kendall. Hello, Willie. How the heck y'all doing, Top Dog Shred Lords? Welcome to the stream. Welcome to the stream. Hope you both are having an immaculate day, and thank you both for showing up active and early. Thank you, thank you, thank you. I think YouTube gives you guys XP for showing up early, so I appreciate that. I appreciate that. And for everybody else, literally happy Monday. Happy Market Mondays, and I hope all of y'all are cooking, chefing up something immaculate for this week. All right? I'm geeked, y'all. We got so much stuff going on. We got it's crazy how much going on in the world, in the market, on deals, on content. It's just like so many crazy things. So many crazy things. I'm just so geeked for everything, you know? Willie says, any tips on starting a cleaning business? Why not buy one? You know? Hey, Willie. Hey, Willie. I'm here to ask the questions that you may not be thinking about. Why not buy one, bro? You know what? All because you said that, Willie, I'm going to find you a cleaning business for sale. Give me a state. Give me a state. It can be any state. It doesn't have to be yours. I'm just going to find you something that's going to set you up, man. I'm going to find you something that's going to set you up. For my boy. For my boy. Let me get you right, Willie. Willie, let me get you right real quick. I'm going to find you something. Look, you said cleaning? Get your little cleaning business real quick. I'm going to show you it's possible. Hey, W True. Thank you for subscribing on YouTube. Welcome to the fam. Top Dog Shred Lord. Happy Monday and hope you're doing incredibly well, my man. True. Like True Religion. Let's see. Or like 2 Chainz. 2 Chainz used to be saying true. Y'all a little too young for that 2 Chainz. Hold on. Okay. We're going to find you a cleaning joint. And also, if you're going to do something that's cleaning, I highly recommend you try to have something focused on the commercial cleaning, because if you can do that, that's banger. But if you're going to clean something, you might as well clean something that has deep pockets and high cash flow. You know what I'm saying? Oh, you can't even see my screen. My bad, Willie. You can't even see my screen. My bad, Willie. My bad, Willie. CJ, what up, Top Dog? How you doing, man? How the heck you doing? CJ coming in with the intel fast. Let me screen share on this. CJ is coming in with the intel fast. Wasting no time. And guys, if you're asking, I got no more I got no more plugs at KKR. So I don't know what's happening. I don't know what's happening, y'all. I got no clue. I got no clue. Don't ask me. Kenny Finance don't know no more. Kenny Finance don't know no more. Don't ask me. Don't ask me, chat. All right, anyway, let's find Willie a cleaning business in Illinois. So, Willie, I like this one. Turnkey, never mind. I don't like this. I lied. This was started in 2024. A business that started in 2024, we literally have no time for that. No time for that. Why? It's a startup that gave up in year 2. Pass. This one here, I thought it was cool. It might be nice, but it's a startup that gave up in year 3. Pass. But I like the mega theme of like cleaning solar panels. Deep-pocketed customers. You got to clean these things or else the yield and utilization on these solar panels are going to absolute is down. You know? Let's see what else we can find you. Bum, bum, bum. Porta potty business? Okay. Solar market is dollars. It used to be. Now solar's chalk, bro. Solar's chalk now, bro. But low-key, you can probably get some crazy entry valuations for these solar businesses. The issue is a lot of these, hold on. This good goop. Oh my goodness, this is good goop right here. This is good goop. Oh, geez. Willie, I think we're cooking, bro. We're cooking, bro. This is what happens when you show up early, Willie. You get deals, bro. You get deals. Congrats, Shred Lord. Here, I'm going to send you all these, and I'm going to put it in the Discord. And guys, Willie has dibs. No one can take it. It goes to Willie. I'm going to put it in a business buying stream. Okay? Let's see. Here's the Discord. What was y'all talking about today? Oh, Austin has been sourcing deals for people. I don't know who, if anybody's like actively looking to buy. I can't zoom in, guys, so don't complain. But Austin says that he found a oil field services business in Texas asking $7 million, doing $7 million in revenue and roughly 20 employees. They haven't listed for sale and they haven't told anyone that they want to sell. He was their first conversation. And he's trying to see if there's any buyers that might be interested. Who do you know? Who do you know, chat, that's got a Discord where people sending deal flow that's not even marketed yet? Nobody! We're cooking, chat. This is the coolest community literally in the entire global. Coolest community literally in the entire globe, chat. Can't nobody touch our community, y'all. Anyway, Willie, let me chef up some things for you. All right, so we like this one. This one here is a dryer vent cleaning business. Be careful because it might be a franchise. It smells like a franchise. Is this a franchise? Yeah, it's part of a franchise. Never mind. If it wasn't a franchise, it's really good. But usually these things are part of a franchise. But that's a good business model. If you want a franchise, you can buy into this too. It's an existing one that's been around for a long time, existing customers, so that might be good. Businesses from Stream. And this one goes to Willie PKR. And we're not doing a crazy sourcing today. I'm just doing this as a gift to Willie. All right. And Kendall, you showed up earlier too. Kendall, if you want a deal, I found you a deal too. This one here, exterior cleaning business backed by strong digital reputation, meaning they have online marketing. This is not a franchise, but a cheaper price point. 1970s. Hands-on. If you get this, you're going to have to get your hands dirty. But if you want to get your hands dirty, that's a good one too. Boom. Boom, 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 boom. Cool Webby, what up, top dog? Our Palm Beach Prince in the mix. How you doing, dude? Ooh, a thriving commercial cleaning. You remember I just told you, Billy? I like commercial. We gotta love commercial. This one here is going for $282,000, and it does 100 grand of cash flow annually. This is almost like a 3 times multiple, sub 3 times. Business has added 10 new commercial contracts in 2025, despite limited marketing and ample opportunities for growth. No brick and mortar, and this is a home-based business. And the 2025 sales are up 20% year over year. Is this a franchise though? No, it's not. Dude, and they're freaking trying to retire. Dude, this is recession proof. Dude. Normally, this is when I would try to gatekeep and try to get this one myself. But you know what? I made a promise to our guy, Willie PKR, that I will find him at Illinois. And it's been around for 20 years. My guy, my guy. The least you can do is smash that like button. Here's my favorite out of these. I'll rank it. I think this is the top one out of all these. That. Boom. There you go, Willie. So find that in the Discord on the business buying channel. And reach out to them, get the book. And even if you still want to start your own, you might as well talk to the banker, get the sim, and learn about what these folks are doing. And then literally just like take their strategy, make it better, right? So if you really want to start one, now you at least know what makes one that lasts 20 years, gets 380,000 of revenue, and profitable with like 30% margins, right? That's how you cook up, top dog. That's how you cook up. All right, I'm gonna hit send. Well, we're not doing any more sourcing for people, so unless Kindle 101, but we're not doing any more sourcing, so this one goes to Willie. No one take this, by the way. You know we have our Scouts Honor respect code. All right, there you go, Willie. Happy hunting, my boy. For everybody else, how we doing? Good to see you. Good to hear you. What the heck's going on, y'all? CJ, how you doing, my guy? What's been going on, man? It's so funny. CJ starts the chat off lowercase, and then he gets back into his mode by going by all caps. I know it's CJ when I see all caps. You know what I'm saying? I know it's CJ when I see all caps. Hey, CJ, I hope you're having an immaculate day, bro. Hope you're having an immaculate day. I hope you made a bunch of money in the markets. And I hope you're doing it well, man. Always got cap on. Let's go, bro. Let's freaking go. And Cool Webby, catch me up, bro. What's been happening in your side of town, man? How's Florida these days? Yeah, CJ, you crazy. TPL. That's good goop, bro. That's good goop. How's TPL doing today? Oh. What spiked crazy this morning. 7% literally at market open in the first 10 minutes. And then came back down a little bit. Was that us pushing up weight? Nah, Chat Capital did not move the needle on that equity. I'll tell you that. Porta potties, septic trucks, great businesses. Great freaking businesses. You can make Silly Willie's vent cleaning business on your own dime. I like that. That's a good franchise. Franchise that out. Silly Willie's vent cleaning. Scott Nuttall bought $12 million of KKR stock. What the heck? If you guys don't know who Scott Nuttall is, he's the co-CEO of KKR. Bro, it's still down. Wait, what? I'm so confused. It's down 9% today. Can I just tell you guys something? I think I might have made the greatest trade of my career a handful of months ago. Oh yeah, and Joe Bay, he's the other co-CEO. You know what happened? Probably Henry Kravis and George Roberts probably pushed them and they were like, hey, we're going to give you a crazy bonus this year. This is all hypothetical, by the way. They're probably like, we're going to give you a crazy bonus this year. I'm going to need you guys to buy more of your own stock. You know what I'm saying? I need you to show conviction and alignment in our business, you know? But those guys are dogs. Joe Bay and Scott Nuttall, they are dogs. KKR is such a great firm. Such a great firm. It's just a tough environment for all of sponsors right now, I think. And it's the private credit narrative, y'all. But what's funny is, like, the trade that I made, I got out of all financial sponsors stocks, I want to say like a month ago, right? I don't want to share the screen because then if legal comes at me, they're going to see me looking at specific stocks and all that. So I'm going to keep it generalized. So I got out about a month ago, and then I rotated into this name here. I got out of sponsors and I rotated into Applied Materials, AMAT, which is they're providing like some of the key equipment that's providing some of the pieces for supply chain choke points, you know. I got nothing against sponsors. I mean, all my career has been working at some, but it's just like opportunity costs of dollars. I gotta fish where the fish are. You know what I'm saying? I feel like all these sponsor stocks are on vacation right now. I ain't got time for that. I ain't got time for that, chat. Anyway, what's happening in the markets these days? Y'all heard about the Trump situation and the tariffs? Y'all heard about the whole situation with tariffs? How later this weekend, Supreme Court said that Trump's tariffs using the like Emergency Tariff Act or whatever that is illegal. And then him coming back yesterday and today with a brand new Section 122 playbook to get the tariffs back. It's literally spit and spat back and forth. There's gonna be a little bit of volatility this week in the markets. That's my bet. I think there's gonna be a little bit of volatility in the markets, and I think for quality names that you built real conviction in, I think there's gonna be very small moments of dislocation that you can take advantage of. But you gotta have conviction, and you gotta lock in. Yeah. That's the exact playbook that I was gonna say. That's the exact playbook I was gonna say, CJ. What? Now, CJ, how do you usually play situations like this? Do you usually play it meaning like you found particular businesses that are heavily exposed to tariffs, or you just find businesses that are unrelated to tariffs that are just selling off because of the market sell-off? Like, like, you're an options writer. Can you put that in plain English for me? What does it mean to actually be an options writer, besides being like a crazy Tesla options writer? Like, what does that even mean, bro? How do you put that, like, how do you explain that to a fifth grader? I write options. Hey, book buyer, the bookkeeper. How you doing, Top Dog Shred Lord? Thank you so much for following us on Twitch. I appreciate you, Top Dog. I appreciate you. Hope you're having an immaculate Monday and hope your stocks are up, my guy. Or gal. A book buyer can be a guy or a girl. Greenback Jack, what up, dude? How you doing, Shred Lord? Hey, Tom Arena in the mix. How you doing, Tom? Good to see you, Top Dog Shred Lord. Welcome to the fam. Thank you for subbing and hope you're having an immaculate day. Greenback Jack, how's your weekend, bro? Catch me up on life, man. Give me the deets. Give me the deets. Oh, snap. Reagan Shoes in the house. What up, dude? How you doing? Top Dog Shred Lord, how are you doing? Catch me up on life. How's campus? How's school? How's all this? Hope you made some money in the markets too. Oh, you think you should sell insurance in this little market pullback? Or what you mean by sell insurance? Because one thing about me, I ain't about to be going door to door selling no insurance, and I ain't about to be on TikTok making life insurance sales calls that go viral. We ain't got time to be selling insurance, man. What you talking about selling insurance? Wait, options writing is like being the house in a casino. I still don't get it. Okay, so for options writing, contracts can yield about 1 to 3% cash a week. So no matter the direction of the particular stock, all the capital gets allocated to TPL for the hold. Oh, okay, but who gets to decide what that yield is? And is it a transaction fee? Is it like a placement fee? Like you get to place your options trade and it's like a monthly recurring placement fee? How does that work? How do you derive the 1 to 3% cash yield? Premiums based off implied volatility. Okay. So, what you're trying to tell me? Tim Manning, what up, Top Dog Shred Lord? Thank you for saving the day here, because I'm still confused. Selling options, the premium to option buyers. Oh, wait, Cool Webby, you were able to get out of a short position with some profit this morning? Cool Webby, you out here trading? What you trading, bro? Share the goop. What was the play? Cool Web, you can't be out here making these kind of smart money moves without letting us know. And first and foremost, why are you shorting, bro? Shorting is so dangerous in a bull market. It's so dangerous, bro. You better have been shorting something that's just like freaking Blockbuster. Because I don't know what's bad these days. Everything looks good on surface. But then when you peel below the onion, a lot of stuff's actually crap. But Cool Web, he spilled the goop, bro. And then Reagan says Canadians' Loblaws grocery chain is about to have good earnings. Is that a cockroach business? Canadians' Loblaw. Because you're Toronto-based, right? You're an OVO guy. Canadians' Loblaw grocery. Such a funny name. Loblaw. Is this like a bougie one? What do you think's the US equivalent of Loblaw? Hold on. Here, I'm gonna go back to what I used to do when I was a kid. When I didn't know anything in high school, I would live on Investopedia.com. Hold on, Catalona mi amore, Catalona mi amore. I have to learn something right now, babes. Okay, so we are going to learn in 5 seconds how to write options. Now, granted, I'm not saying you should do this. I'm just doing this for educational purposes to understand what it means to write options. Okay, writing an option means selling a contract that gives the buyer the right to buy or sell an asset at a price in the future. The writer earns a premium, which is the 1 to 3% that CJ talked about, for taking on this obligation, with the amount of with the amount influenced by like volatility and time to expiration. While writing options offers flexibility and income potential. They spell it wrong. It also carries the risk of losses if the market moves unfavorably. Spaghettios. All right, here we go. So writing an option involves selling an options contract and receiving a premium for the risk taken. Why is the premium weekly though? Like, is it like, or every time you write an option, you get a premium on that? So like you're doing weekly option writing, CJ? Okay. Option contracts grant the buyer the right to buy or sell shares at a predetermined price and date. Writing options can generate immediate income but carry the risk of significant losses. Time decay benefits the option writer by reducing the option's value, lowering liability. Writers can limit losses by combining options writing with other positions, like covered calls. He literally just wrote covered calls on the chat. CJ's an options genius. CJ, do you want to be the head of options for us? We're looking for a head of options for Chat Capital. We're looking for a head of trading. I think that goes to James. I think we need a head of options. I think that goes to CJ. CIO for the value bucket, I think, is A-Dub and Jack. We're building out the investment team here. We're building out the investment team for Chat Capital. So, okay, understanding writing an option. So the traders write an option. Okay, wait, give me an example. Writing options examples. Okay. Google Finance, you're up. Okay, here. This is what we're going to do. We go to here, and then we go to Google Finance, and then we tell Google Finance, help me make a simple, basic example, numerically, of writing options for the cash yield for an asset like Tesla. Walk me through the details and the returns in a simple to understand manner. Gemini, once again, comes to save the freaking day, chat. Here we go. Okay. Writing options for cash yield typically occurs to cover calls. This is a popular way to generate immediate income from a stock you already own, like Tesla. Think of it like being a landlord. You own the property, aka the stock, and you're collecting rent, the premium, from a tenant, the option buyer, in exchange for giving them the right to buy it from you at a specific price. Okay, here we go. All right. For everybody that needs to understand the simple stuff like me, okay? I'm not advanced like these guys. Cool Webby, CJ, Reagan. Like, I'm not smart like these guys. I'm not a genius like Tim. Okay? For the basic folks like me, this is what we got to do. Okay, the setup. To keep the math clean, we will use a 1 week outlook with rounded numbers. Y'all can't even see it. I can't zoom in though. My bad, chat. 1 week outlook with rounded. Okay, to keep the math clean, a 1 week outlook with rounded numbers based on the current market trend. Tesla's at approximately $400. So you own 100 shares of Tesla. Options are always in 100 share blocks. So the total investment is 100 times 400. So it's $40,000 worth of Tesla shares. The goal is to generate income without necessarily wanting to sell the stock. Okay. Now, step 1, you have to write, aka sell the option. Okay. So you sell one call option contract with a strike. What is a call on a strike? What the frick? Okay. You sell one call option contract with a strike price of $420 that expires in 7 days. So the strike price of $420, this is the price you agree to sell your shares for if the stock hits that level. The premium, this is the rent you collect immediately. Since the contract covers 100 shares, you receive $500 cash deposited into your account instantly. Oh, snap. Oh, snap. Okay. Here it is. I own Tesla stock at 400, and I think that there are... Wait, okay. Now I'm confused. So if I own Tesla stock and there's people that want to buy an option on Tesla stock to have it go to 420, do I need to take an opposing position and assume that it's not going to hit 420? Is that what I need to be doing, chat? Chat, do I need to have a position that do I need to think that it's not going to hit 420 so I can just hit that premium and then keep my stock that it actually never sell? Because it'll be bad for me if I have to actually like give away those Tesla shares, right? Or this is why I stick to boring businesses. How is it that we are literally 30 minutes into stream and I'm already confused? Jeez. Okay, shut up, Kenny. Lock in. This is not rocket science. If Elon Musk can build rockets and solar panels and electric vehicles, you can understand how to freaking write an option. Okay, lock in. Okay, so you sell one call option contract with a strike price of $420. That strike price is the price that you agree to sell your shares for if the stock hits that level. The premium is kind of like the fee, aka the right to buy this contract of 100 shares. And that $5 to $100, I get immediately. Next. The 3 possible scenarios. Here's the sweet spot. After 7 days, the option expires. Here's how your yield looks in 3 different market conditions. The sweet spot. The stock stays below 420, meaning that it actually doesn't exercise. It doesn't hit, okay? So if Tesla ends the week at 410, the buyer won't exercise the option because they can buy Tesla cheaper on the market. So I keep my 100 shares and I also keep my $500 cash premium. And my yield for the week was whatever that premium is divided by my AUM. If you did this every week, your cash yield would be very high, though in reality, the stock price moves and premiums change. Okay. Now, the cap wind. Tesla, okay, stock rockets above 420, okay? So market price, Tesla jumps to 450 on some big news. The result is the buyer exercises the option and I must sell my shares at the agreed upon price of 420. So I get to sell my shares at 420, but then I also keep the $500 premium, but I missed out on the gain between 450 and 420. Okay. So that's the downside. You get to miss out on gains. And then the cushion loss. So if Tesla stock falls to 380, the option expires and are worthless. And then my shares are worth 3,800. I never sold though. I still keep the $500 premium, but I'm down just because on paper of the market drop. Okay, that makes sense. I understand it now. Chat, I understand it now. I understand it now. Okay. See, I got discouraged for 5 seconds. Okay. Why would make money on a stock be bad? Call, long, put, short, all the ABCs of options. This is literally why I just stick to a P&L. There's no alphabet soup when it comes to a balance sheet and a profit and loss statement. It's either it's growing or it's not, you know? Indeed, and you write them again and again. Okay, but my question, CJ and Tim, since you all sound like options experts, my question is... My question is, after 1 week happens, like, is it kind of just like it expires? Like it automatically expires after 1 week, right? Or are options extended? You know? So that means I have to take immediate short-term points of views around like the 7-day window of an option. You know what I mean? 85% of options expire worthless. Dang. Compound interest is different than appreciation. Yeah. How much gain can you lose out on in 2 trading sessions? Top. Greenback, are you still confused? I got a little less confused, but are you still confused? We got to figure this out, chat. Do we though? What if we just give CJ the money and let CJ make these plays? Oh, you can roll over options to extend the time? Cool, Webby, are you an options expert? You never told me you were in options, bro. Why am I just not hearing about your options lifestyle? And Reagan, what's your view on this? You said they're going to print well? What's the goop, man? What's the goop? What you know about it? What you know about it, bro? Anybody shop here? Wait, also... Reagan, you can't be mentioning the stock if you don't shop there, you know? Greenback Jack. Why are you day trading and investing in crypto? Serious question, bro. It's like day 50 of me streaming, talking about how bad day trading in crypto is. Come on, bro. And you're trading futures. Bro, just buy index funds. What are you doing in Greenback Jack? This stuff is way too advanced and hard, dude. Granted, you probably know all this stuff, but... Bro, I've been a professional private market investor my entire career, and I'm staying away with a 10-foot pole away from crypto and day trading, bro. It's so grimy, bro. It's so grimy. I don't get it. It's dangerous, bro. It's so dangerous. But you know what's not dangerous? Literally pulling up to your local AutoZone and getting your car fixed, right? Getting your car fixed or buying literally the windshield wiper replacements and realizing that, wow, this is a publicly traded business that does nothing but print. 12% in the last year. It ain't sexy options numbers, but it's something. But look over the long haul. Greenback Jack, this is for you, bro. 5-year horizon, 230%. Max returns. Lock in, Shredlord. Lock in, Shredlord. Boring, cockroach-like businesses actually work. Over the long haul. You're investing for days when you should be invested for decades, brother man. Come on, bro. Come on, bro. We ain't got time, bro. Stop staring at a darn chart all day. No, you don't need the money fast. You do not need the money fast. Fast money becomes fast loss money just as fast as you found it. You know? You don't need the money fast, bro. Take your time. If you need the money fast because you live in an expensive lifestyle, downgrade. Downgrade from a 3-bedroom apartment to a studio. If your partner or you're dating somebody that's super expensive, dump them. Get somebody cheap. If you're driving a BMW M-Class, get a Toyota. Right? Downgrade, bro. You don't need fast money. You need slow, boring, cockroach-like businesses, bro. Because this stuff is not for the faint of heart. See, I don't even know what any of this stuff means, bro. Bro. But people out here making money off of this stuff. That's what's crazy, though. But if you're gonna do it, Greenback Jack, you gotta learn from folks like CJ. I don't know if you guys are doing exactly the same. I think I bucket it literally all into the same category. If you're gonna do it, you gotta learn from someone like CJ. So y'all need to have like a Discord call or like a coffee chat, whatever, just to do some knowledge sharing. James is gonna put on a monster or a master class one day on everything he learns. You're watching Chains all day, James. Oh, not James, CJ. You're watching Chains all day. That's crazy, bro. Google the standard deviation curve. The visuals helped me many years ago. Ooh, okay. Options, the standard deviation curve. What they talking about? Okay, so what they're trying to say is like, okay, for options. Bro, if you're in college, you definitely shouldn't be doing that. Okay, I assume that like these are the amount of ones that actually end up worthless. These are the ones that actually hit it, and these are the ones that don't hit it. Or these are the ones that hit the exercise price, and these are the ones that like go terribly in the wrong direction that hurt you, or something like that. LOL, I'm still in college and live very low, but want to upgrade my life. You can upgrade your life, bro. You can upgrade your life when you're 40, 50, 60, 70. It's slow, but it adds up over the long haul. I'm telling you, Greenback Jack. I'm telling you, broski. I'm telling you, over the long haul, literally, I want you to hit me up when you're 75. When you're 75 and you put $100 into the market every week, I want you to hit me up when you're 75. Not into individual names, not into no options chains, simply into an index fund. Simply into an index fund. I guarantee you will become incredibly wealthy when you're 75. And if you're not wealthy when you're 75, lunch on me, bro. Lunch on me. Let's do a little side pocket bet, huh? I bet you lunch anywhere you want. You call it. McDonald's, Wendy's, Nobu, Jack in the Box. I'll tell you, the best one. We're going to find the one that Warren Buffett says. What index fund does Warren Buffett recommend? Boom. Here you are. Warren Buffett, the greatest investor in the entire world, recommends that long-term, non-professional investors buy a low-cost S&P 500 index fund to achieve superior returns. And he thinks the Vanguard S&P 500 ETF, VOO. Let's look that up. All right. 14% in the last year. That is nice. Last 5 years, 80%. Over the lifetime. Well, it's not, okay, this is kind of old. But well, it's not that old. There's actually one that's older than this, the SPY. They're both the exact same thing. Just one's made by State Street and one's made by Vanguard. But if you look at the lifetime of this, 1,500% returns, bro. This right here, it works, bro. It works. It works, bro. And I'll give you a little bit of math. Let me give you the math. I'm gonna show you some crazy math real quick. I'm gonna play some crazy math while I play our crazy billionaire song. I keep forgetting on stream we have to play this early on. I keep forgetting, but you know what? Let's play it now. All right, because you want that fast money? That means you want to be a billionaire, Green Blackjack. All right, or greenback jack. Let's say you started with $1,000. All right, and then every single year, we're not doing 50%, CJ. That's not possible. All right, every single year, you're putting in $1,000, right? And then the annual return, you're doing, no, it's not, CJ. Then every single year, you're getting a 11% return. All right? And let's say this is you right now. I'm assuming you're like 20. If you're in college, you're like 20. Right? So you got $1,000 right now. This is how much you'll have if you put $1,000 into the market, getting 11% return every single year. Right? Here's your age. It starts to grow. Oh, you're 24? Okay, 24. Right? You're 24, putting 1,000 in. Wait, is that reasonable? 1,000 starting off and 1,000 each year? Or can you do more? How many can you do? How much can you do? Let's be real about it. And I can give you 1,000 ways to make $1,000. Anyway, let's try 1,000, right? Okay, so if it's 1,000 and you're putting 1,000 in annually, when you're 40, you still get like $44,000. That's nothing to write home to mama about, right? But when you're 50, you already got 6 figures. But I don't want you to think about, oh, like the dollar amount. I want you to think about how much you're making in the market each year just from your returns. You're only putting $1,000 into a system, but yet each year you're getting $15,000 of return. That's called compound interest, but it gets better. Let's say when you're 60. When you're 60, that balance becomes $400,000. And what's that annual difference? Is it $15,000? No, it's $40,000. So that annual mushroom effect is going crazy. Now let's say, for example, you're 70, right? Then you start hitting the $1 million portfolio, right? Oh yeah, I'm gonna show you that. That's gonna be crazy. With this $1 million portfolio, let's see what the annual return of you doing nothing, just leaving your money in the market and also just adding another $1,000. Let's see what happens. $121,000 annually. And this is just investing in literally one of these safest market products, which is an S&P 500, right? Let's assume when you're 80, what happens? When you're 80, you're at a $3.5 million portfolio. And what's the difference? The difference is $350,000, right? That is like Buffett gained 99.5% of his wealth in the last 20 years. That's exactly what happens, is when you're older and the machine just grows and grows and grows. It's literally a mushroom that doesn't shrink if you're in something that doesn't have crazy volatile performance. And this is getting 11% return in the S&P 500. All right? Now, I'm not going to speak on how long you're going to live. But let's say, for example, you get to 90 and 100. Let's say you're living to 100, bro. If you're living to 90 years old, and keep in mind, this could be for you or your kids that you pass it down to or your grandkids, right? Annually, just based off of your investment portfolio, there's $980,000 annually from investment returns. And then when you're 100, there is literally $2.8 million annually in investment returns. And that's 100 years in the game. Versus annually, you were making $1,110 of contributions plus returns. Let's just do pure returns. You just made $110 of returns in the market. This is where folks get discouraged. They're like, why am I putting in something and I'm literally only getting a $100 return this year? That is nothing. But in reality, if you just like forget about it and set that habit for a handful of years, that same theoretical $100 becomes one of these, 15,000. But you're like, oh, that's still kind of not a lot. What am I going to do with that? Oh, you just keep that habit going. 40,000, 120,000, 300,000, $1 million, $3 million. But this right here, Shredlord, is with an 11% return. Let's talk about if you have a little bit of that dog in you like how CJ has, and you invest in things that are like still diversified, like a tech ETF or something like that. And you get, instead of an 11% return, you get a 15% return. Not crazy different, right? A 15% return. Boom. Now you're balling, right? You went from $150 of gain or $110 of gains to $150. But once again, it's kind of like, oh, that's not something to write home to mama about. Right now. Let's show mama what you're doing in the long haul with literally just a 4% delta. A 4% delta in your investment performance. Now, instead of $15,000, you're sitting at $37,000. Then you're getting $150,000. Then you're getting $600,000. Then you're getting $2.5 million. Then you're getting $10 million. Then you're getting $41 million with literally a 4% delta. How do you achieve that? Maybe being in more concentrated index funds, maybe having a bet on a certain thesis for a market, right? Going a little bit heavier in a market like tech-enabled or growth or some things like that. But let's show you what you would have if, hold on, wait, I'm not done cooking yet. Let me show you something, all right? Let's do this. This would be good for giggles, Oops. 10%, 15%, 20%. All right. Watch this. It's gonna blow your freaking mind. Okay, how do I paste this? Paste values, right? And then 15. Let's do this. And then paste values. Just so you can see the difference, right? Age. Okay. Now, I just did a little bit of like wizardry there for you. So let's assume that this is the returns that you're getting in the market with these different things at different ages. When you're 25, these things aren't something to really, write home to mama about. All right? 10% is only $100. 15%, $15 or $150. 20%, $200. But when you're 50, it becomes 11 versus 38,000 versus 100,000 if you get a 20% return in the markets, right? But when you're 60, it becomes $30,000 to $153,000 to $708,000. And this is annually the return. This is not overall portfolio value. This is annually the return, right? Annually the return is going to be $80,000 when you're 70, $600,000 when you're doing 15%, and then $4 million when you're doing 20%. That just literally shows that the incremental return gains that you get in risk-adjusted assets can go from 80,000 to 600,000 to 4.5 million. All right? And if you never stop contributing, it goes even nuts, right? And then when you're 80, it goes, and this is annually the returns, 200,000 annually, 2.5 million annually, and $27 million annually, right? And then don't even get me started when you're 100. And I say this because you're like, wow, I'm not going to live to 100. Well, your last name will, right? You can, when you pass down your stocks to your kids using a step-up basis, and they inherit your entire portfolio tax-free. And the machine keeps on running. And if you're trying to tell me if you have kids or grandkids and they can't live off of $1 billion annually of compounded returns, you did something wrong in your values teaching there. You know what I'm saying, Shredlord? Anyway, it's not about what you're making this day, this week. It's about what you're making when you're like 100 years in the game. Let your machine compound for 100 years, bro. 100 years. You feel me? But I just wanted to show you what it was like annually. Let me show you a little bit about your portfolio in aggregate. Your portfolio is $6 billion in aggregate if you let your machine play for 100 years. Or no, theoretically 80 years, because this is 24 plus 80, right? It's a $6 billion machine, and you're only putting in $1,000 a year. But you picked assets that were getting 20% annually. I say 20% is very unrealistic because it's tough. It's very tough. It's very tough. I think realistically, if you're tuning into our streams and you're a Shredlord like that, and I've seen your name a few times, so you be showing up, I think it's reasonable you can get 15% returns. I think it's reasonable you get 15% returns. I think it's reasonable. And that if you just leave it into the system, you can see this portfolio just grow massively over time. Boogie likes to put this stuff in charts. So let me show a chart for you. Boogie's always yelling at me, put it into a chart. I'm like, bro, I'm not a freaking banker. Shut up, Boogie. Shut up, Boogie. Anyway, get rid of these grid lines. See, I don't even know how to freaking grid lines, vertical axis. Major grid lines. Okay. And then horizontal axis, major grid lines, right? This is what your portfolio can look like, right? It just grows. You see, it's very flat. It's very flat for a long time. Like, you don't see anything. It becomes like virtually nothing for like 30 years. Or it's like virtually nothing when you're 50. A little bit when you're 75. But when it's like in the game for 100 years, it's a long period of time. Now, am I saying stop all forms of your day trading and all that? No, it's probably fun for you. And it's probably a good intellectual exercise. And it keeps you glued to the markets. That's not a bad thing at all, right? Yo, you got to have some fun somehow. It's not there's worse ways people can occupy their time. You know what I mean? But what I will say is make sure you just have at least something into a boring compounding system. Make sure you have something in a boring compounding system, right? Just something in there. You know what I mean? And it could be like every time you get paid, you take 30% of your paycheck, you put it into your boring compounding system, aka index funds, but then maybe 1% of your paycheck, you put it into your little Robinhood and you just like have a blast, have a blast. Right? Ooh, hold on. Look, and then here's an example of like, what if we bought TPL? What is TPL's compounded annual return since inception? Right? TPL's compounded annual return since inception has been 20 to 30% over a 40-year period. So let's say, for example, you did all this and like you just put all your money into like one stock, which is, it's still risky, but let's say you did TPL and you got 25% returns. If you did TPL and you just put $1,000 into TPL and you annually put another $1,000 into TPL and it got like a 25% average annual return over the long haul. And what that means is some years is going to be 30, some years is going to be 10, some years is going to be 25, some years is going to be 20, some years is going to be 50, some years is going to be 5. But on average, If you take the average annually, you're looking at 25% return over 40 years. And it's straight facts. It's done it. This is what your portfolio could have been. Like if you make TPL your retirement, and I'm not saying you do that, and I don't condone buying just TPL. This is not investment advice. This is life advice for the shred lords. All right. Look at what you're going to have when you're old. Okay. It doesn't even fit. That's $280 billion of your family's wealth. Anyway, let's just say when you're 60, like actual retirement age, your $1,000 contribution into that boring name, and you put $1,000 into it annually, you're getting $47 million when you want to retire. All because you put $1,000 into something that was an operating business that compounded and was cash flowing well and had a clear moat. That's why Warren Buffett does really great, boring names, and he's concentrated to them. All right? Warren Buffett ain't got 500 companies. He's got like 10, 15, 20, right? But they're like long-term names that he holds for a very long period of time. Most people would buy TPL here and sell it in 5 years and only turn that into like a $15,000 thing, right? The key is to buy TPL when you're in your 20s and literally hold it for 100 freaking years, right? That's where the stuff goes crazy. And let's look at your annual returns. Annually, what you're clipping, right? Annually, what you're clipping, if TPL does 10, 15, or 20, but this is actually 25, what TPL is clipping are crazy returns. Annually, you can get $28 million when you're 70, just off of the gains on this. And if you need to access it to live, you get a liquidity access line in your portfolio. Balling, right? Tax-free. Hey, don't let me cook too much. Hey, I can't be giving away all my secrets because I don't even think y'all smashed the like button yet. And I'm out here cooking for y'all. Y'all talking about I'm trying to do this and that. Look, I'm trying to make y'all billionaires. I'm not here to show y'all how to day trade. I'm trying to show you guys how to be billionaires. You know what I'm saying? And don't even get me started if you want to do a holdco. Start your own like private company strategy. You buy a cash flowing business and you literally take all the cash flow from the cash flowing business and you make a decision to either reinvest it into your operating business, buy more private companies, or put it into public stocks like TPL to where you're getting 40% plus levered free cash flow yields on your private business. And it's recession resilient. Everyone needs it. Pest control, HVAC, electricians, all that cash flow. You then toss it into TPL, and TPL is growing 25% plus a year. Bro, chat. I don't know who else is talking about this. I don't know what else is I don't know what else people are talking about. Why would I show y'all shitcoin when I can show you guys the slowest way to make billions? I'm just saying. So with that, I think I have an agenda of real stuff to talk about. But I want to do a roll call for the new folks in the chat. First T, what up, Top Dog Shred Lord? I got sidetracked already, First T. I was supposed to talk about private stuff, but then I got into the whole public market stuff. I'm just out here vibing, bro. Cool way to be out here giving a straight game. Don't ever stop contributing to your investments, y'all. Whatever it takes, put money into the compounding system. It freaking works, y'all. It freaking works. And don't be yelling at me if it doesn't work in 3 years. Don't yell at me if it doesn't work in 5 years. Don't yell at me if it doesn't work in 20 years. I'm telling you, it works in the 50, 70, 100 year horizon. And who cares if you can't eat off of that? It's not for you. Let your kids eat off of that. Let your grandkids eat off of that. That's the most selfless thing you can do to preserve your legacy, and that is investing for generations. What we talk about, Greenback Jack? What up, my boy? Now you talking about language, that slow money. I'm talking about that slow money, that old money, boy. I'm about to start calling you Gatsby. Greenback Gatsby right there, my boy. To where every single year, Every single year, you got a portfolio of cash flowing businesses. Your index funds are spitting out millions of dollars annually. You're taking out liquidity access lines just to cover your living expenses, and those are tax free. You're crushing it. You're not paying any taxes when you pass away because you gave it to your kids using the step up basis. Hey, that's good goop right there. That's good goop right there. You know what I'm saying? Shredlords, how we doing? How we doing? How we doing? Hi, Story Cavern. What the heck going on? What do you think of e-commerce businesses for sale? It's like a wild mix of e-commerce businesses. You got to really pick the one that's like good and differentiated. Because right now in e-commerce businesses, they're either hella competitive, meaning every crack teenager is trying to start one, or AI is displacing them, or software companies are buying them at wild valuations, or you found the golden nugget that's actually a good one, that's recession resilient, and has a clear moat with good recurring revenue contracts with customers. You got to try to find that fourth one. But if you let me know what kind you're particularly interested in, then we can do a little deep dive into some of those. But that actually relates to the topic of today, which is like ranking the private equity roll-ups. And I have a ranking assignment for the e-commerce software ones. You know? Is that my guy in the chat? Garrett, what up, dude? How you doing, man? So good to see you, Garrett. Garrett, I hope you had an immaculate weekend. I hope you're having a fantastic start to your week, and I hope Florida's treating you very well, my guy. And I hope that dashboard is going well, bro. I know you've been grinding. So I hope your quant dashboards are going really well. You should also build a dashboard for CJ. CJ's got these option chains that he's watching all day. You should probably build a dashboard for him to help him like AI automate that so that CJ can like chill in the pool and get alerts on his phone anytime an option pop off. You know? My goal is to help CJ print his 50% returns while he's sitting in Cabo. Well, maybe not Mexico. Mexico's got a lot of stuff going on. While he's chilling out there in Paris, eating some crepes and stuff. And just get a little AI nudge. You know what I'm saying? You know what I'm saying, chat? Bitcoin could have a future still? I don't know. I think crypto's a scam. I think it's a scam, guys. While y'all out here buying crypto, I'm buying freaking index funds. You trying to tell me that thing's down almost 50%? Oh my lord. Oh my lord. A1 Prize, what up, top dog Shredlords? What do I think about penny stocks? Stay away with them with a 10-foot pole. Wait, CJ, that's a really good response. Penny stocks are penny stocks for a reason. That's good. I would stay away from penny stocks. I think we made a video. Did we make a video on stream together where we like practiced with penny stocks? Or not practiced, but we just like ranked them. Didn't we do something like that? And we couldn't find any. Out of all the penny stocks, we couldn't find any of them. What else we got going on? But A1 Boris, not A1. A1 Prods, hope you're having an immaculate week. And I hope that little segment just inspired you to think about index funds for the long haul, right? Like I would take 30% of your income, every single paycheck, put into index funds. And then 1%, maybe less, 0.01%, if you're obsessed with penny stocks for some reason, into your penny stocks experimenting. But I think 99.9999999999999% of them will probably fail. And that's not me being a butthead. It's just stats and facts. Like if you guys are ever interested in like what your experimental investing strategy would be, simply do a Google search of long-term failure rate of blank. Let's do that together. This is the cool math we did. Just put it in TPL. Literally, you can be a multi-billionaire. And that's that. Long-term failure rate of penny stock investing. Penny stock investing carries an extremely high long failure rate with approximately 60% of these stocks approaching zero value within 3 years. That's all I need to see. That's all I needed to see. That's not a risk-adjusted return I want to take. You know what I mean? That ain't what I'm trying to do. Boris, what up, dude? How you doing, Top Dog? Good to hear from you, Shred Lord. Good to see you. I'll be honest, you made me fall in love with PE. Oh, thanks, man. Dude, you're gonna love this segment that we got today. You guys are gonna, if you guys are like, interested in PE, you're gonna love what we got to talk about later today. We're doing a game where we're like ranking the top roll-ups from private equity folks. And for the ones that are S tier, we're gonna actually find some. And I'm gonna dish it out to people in the chat. And I'm gonna put it in the Discord. Also, let me put the link to the Discord, y'all. Y'all better get y'all butts in the Discord. Get y'all butts in the Discord. And W. Austin for being in the Discord, sharing extra proprietary deals. I don't know anyone's Discord in the entire world that is this chill, this cool, and people are out here sharing actual deal flow. So get y'all butts in the Discord. All right, but Boris says, I'm going to test the roll-up strategy and divide the cash flow between royalty income and interest payments. Any advice? What is the roll-up? That's the first thing. And then secondly, it depends on what the royalty income is, like what asset within the royalty income. Because you said you're in the Netherlands, right? Is it like a Netherlands specific play? Or, and then interest payments. I mean, you're going to lend out and start to collect interest? That could be cool. Hey, Raj, what's up, Top Dog? Oh my goodness, and Jack, what's up, guys? Wait, oh my goodness, wait. So, Araj, what's so cool is like, you're one of our new Shredlords, but you're also Arc Raiders expert. And what's funny is the guy that messaged right after you, Jack, he was the one that we were playing Arc Raiders with the other day. You know? So you both are resident Arc Raiders experts. What the heck is up, Top Dog Shredlords? What you got going on, Araj? How's your day been? How's your week been? I hope you had an immaculate weekend. Thanks for tuning in, like, consistently on the streams. I've been seeing your name day after day, bro. Thanks for showing up, dude. I love it. I love it. I hope you're learning stuff from me yapping. And I hope you're enjoying your time here. If you got any questions, put it in the chat. But if you got any questions, like, offline, put it in the Discord. And, bro, we got the coolest community in the whole world, bro. So, welcome to Smart Money Moves again. Hey, Jack, my man, our book value expert. What we got, Top Dog, man? Give us some boring business, bro. Give us some good goop, bro. Jack, what you got for us? Every week, Jack got something spicy for us to look at. A business that is trading right now with a market cap that's less than the cash value on the balance sheet type stuff. Or a business that has locked up account receivables but is expected to get a payment in 2 weeks. And the market's not pricing it in. What you got for us, Jack? Give us some good goop, man. Don't gatekeep, bro. Don't gatekeep. Oh, you talking about this? The chart we're looking at? This is just, I just clicked on this randomly. This is just a Bloomberg cover page, y'all. But Jack is right, though. They had a buyout offer get declined. And usually that means that, like, the potential buyer walked, or the value is too low, or investors really wanted them to sell to whatever strategic or sponsor. And that's not looking too pretty because they're concerned that they won't get a good enough valuation later on. And then here Jack goes from being one of the smart investors in the chat to talking about penny stock micro cap companies. Come on, Jack. Don't be playing around with no penny stocks, Jack. Come on, man. Have I ever seen a failed publicly traded company? Yeah. What was the worst one? I don't want to pick on him. He's a great person. He has a good book. But this kind of sucks. Some companies just don't deserve to be public. Tiny Capital. He actually kind of does what I do. The holding company. Started by this guy, Andrew Wilkerson. I'm not trying to talk about his business. I'm not trying to say he does anything bad. But I think he should be a private holdco, not a public holdco. You know? Because like at one point, and he went public during the tech boom in 2021. And the holdco fell 97%. And what he was buying is digital businesses, software businesses, e-commerce businesses, just like what A1 Pod or A1 Productions told us about. And as you know, those didn't work out at all. And AI currently is wiping these things apart left and right. So, this is, in my opinion, a failed project. Right now, it had a quick boom. I don't know what this is, where it jumped up literally 800%. I literally don't know what this is. I'm still bearish on this. You know, I'm still bearish on that. I don't know what y'all think about it, but that's just an example of one that I'm not the most excited about. You know? So hopefully that helps, Cool Webby. There's a bunch of other ones too. Enron's a good one. A-Dub said that one. There's Blockbuster. There's Kodak. There's a current one that like really, really sucks. I think this. Lululemon stock. People just really don't like it. Like over the long haul, it's good, but it's just like Lululemon's getting wrecked right now. You know what I mean? Another one is Figma. Figma's getting wrecked. I don't want to call these failed stocks, but like failing stocks annually. You know? This one's down 78%. Last 5 years, 80%. Another one is Udemy. EdTech business. Last year, down 50%. Last 5 years, down 82%. You see? That's why it's like, I highly encourage you all to not really like over concentrate into specific names if you just don't got that sauce to identify good or bad business. You gotta be honest with yourself. Some people just ain't got it. Some people are impatient and they just ain't got it. Like they don't have an eye for the money. You know? Because this is what could happen. You invest into this super hot edtech business and watch. You invest here, you think you're hot stuff because you got a 16% return. And you're geeked. You're on fire. You're like, oh my goodness. We had, bottles at the club on me, my portfolio. I had $1 million in this and I made 16% on it. Let me keep it. Ugh. It starts to fall. 50%, 50%, 60%. And you're like, oh, let me buy the dip. Let me buy the dip. This is the year it comes back. Let me buy the dip. I haven't looked at any of the P&L. I haven't looked at any 10K annual report, earnings report, or anything. But I just see the chart and I'm buying the dip, y'all. I think it's definitely coming back. Boom. You know? That's how you get chalked. So, y'all gotta be careful with that. Garrett, you want me to do a 12-hour stream on a Monday, bro? You act like we ain't got a deal we trying to close, twin. You act like we ain't got a deal we trying to close, bro. We trying to cook, man. Nah, I can't. I do got the energy for it, though. Low key. I got the energy for it, but I have a call at 9:30 Pacific time, so I can't. I could, I can't take the call on stream. I could do it and come back, maybe, but can't do a 12-hour stream today. Because I did want to play some Arc Raiders tonight, but the discipline in me says I have to work. I gotta crank. So, not tonight, bro. Chat capital remarkably uncorrelated. You can give me 500 penny stock names. You're gonna gather as much as possible first. What kinds of companies do you think are perfect for roll-ups? That's an amazing segment. Boris, thank you so much for proposing such a fascinating question, because that leads us to the most important question of the day, which comes from our good friend, Boris. What is the kind of companies that I think are the best ones for roll-ups? And that leads us to the topic at hand, chat, which is ranking private equity roll-ups. Let me get my screen together for y'all. Ranking private equity roll-ups. And no, I did not plant this. Boris literally asked this on his own merit, but it's a good segment introduction to what we want to talk about today. Because as you can see here, we have a tier ranking sheet that goes from S tier all the way to E tier. And if you're unfamiliar with tier ranking is essentially the best to worst, great to terrible, all right? And S tier implies some of the greatest best roll-ups that are cash flowing, recession resilient, prints, available TAM, all kinds of things. E tier, these are the things that are just bound to fail. These are the things where like you're gonna lose your bread, right? B, C, D tier, these are kind of like, it kind of depends. If you do it right, if you execute right, you operationally are on top of everything, you can make a little bit of cash. But this is the private equity roll-up map of what I think is the best tiers, okay? And we have a handful of these. I'm probably missing a bunch, but these are the only icons that I could find. Here, on the bottom left, we have IT services. These are folks that are literally the tech support for small businesses. Next, we have dental clinics. Next, we have plumbing businesses, all right? And don't judge me on my icons. These are the free icons with transparent backgrounds. This right here is software, SaaS, AKA, all the online ones in e-commerce. This icon right here is laundromats. This is, I think that's electricians. Yes, that's electricians. Then we have funeral home services. Then we have car washes. And then we have after school curriculum, which is like arts and crafts. Okay. And then we have pest control and HVAC and then tax advisory. All right, chat. So we're going to go through literally every single one of these, every single one, chat, and we are going to rank them together of what we think. I'm ultimately going to place them where I think they're going to go, but I want to give you all an option to think through where do you think something is ranked. And it should be quite easy for you because you just put in the chat the simple letter S, A, B, C, D, or E of what you think the ranking is of this particular segment. All right? So let's start with something kind of easy. Let's start with car washes. So when you all think about car washes, we all know what a car wash is, right? You pull up, you either have someone cleaning your car in a machine tunnel that you go through and have someone drying your car and you pull off. Largely cash business. It's all over the place, whether there is a recession or not a recession. If your car is not visible, you probably can't drive it. And there's something about having the aura of a clean car. And they're kind of all over the place. Some franchises, some family owned, but they've been around for quite some time. All right? With car washes in mind, chat, what do you think the proper placement is on the private equity roll-up tier list? Put whatever letter it is in the chat, but spam it down below in the chat on the YouTube chat. Sorry, Twitch, you're not able to participate. But on the YouTube chat, put S, A, B, C, D, or E tier. All right? I'm going to give you guys literally 30 seconds to pick while I vibe out with some of our good tunes. Hey, good to see you, Jamar D. We got some B tiers. We got some A tiers. What else, chat? What else, chat? Press the button. Press the button. What y'all think? Actually, probably a YouTube poll is easier, right? Lo que siento es tan fuerte. S, A, B, C. Okay. What y'all think? You know what? To make it easier for you guys, chat, to make it easier, I want to make it as easy as possible. So to make it easier, we're going to delete this D and E tier, okay? Because that's kind of tough. We're going to delete the D and the E tier. We're going to move everything up here, okay? Chat capital down here. We're going to delete the D and the E tier. We're just going to go A or S, A, B, and C tier, and you're going to be able to vote on the YouTube poll to press the button, all right? I'm doing that to do a little brain hack so that when you press that button, you also press the darn like button. All right, here we go. So when it comes to car washes, is it going to be S, A, B, or C tier? If it's C tier, it's literally a terrible, don't do it. Like, even if you had $100, don't even put it in there. S tier is like, if you see one for sale, you're buying it up right now. A and B, kind of somewhere in between, all right? But here we go, chat. Put it in the poll for car washes. What are we doing? Let's go. What are we doing with car washes? Kareem loves car washes. S tier. I see multiple A tiers. You're downgrading to a C due to future autonomous vehicles. Ooh, wait, that's a really good play, CJ. I didn't think about that. A, B. Anything utility is S. Ooh, okay. All right, all right. Go ahead and vote in the poll, chat. Press the button. It's literally one button. S, A, B, or C. And after you press it, press the darn like button. And if you haven't subscribed yet, I really don't know what you're doing. This is probably the coolest channel in the whole world. I ain't biased. I'm just a shred lord. What are we doing, chat? All right, that is 1 minute. I am going to end it in 5, 4, 3, 2, and 1. The results for the car wash. The results for the car wash is 50% of you all think that it's B tier, 40% think it's A tier, 10% think it's S tier, and C thinks it's, or 0% thinks it's C tier. All right, so for car washes, you all are putting it in the B tier. And funny enough, chat, funny enough, I'm sorry, Kareem, but I kind of agree with them a little bit. I'll tell you why. When it comes to car washes, there is literally zero competitive moat for a car wash. That's the only reason why. Kareem, hey, broski. The competitive moat is so tricky. It's a race to the bottom when it comes to pricing. There is an autonomous vehicle risk down the road, like CJ said. But when you think about it, if you were to put them right in front of each other, a big box franchise car wash versus a mom and pop family-owned car wash, the big pop ones, big box ones, has cash to invest in the marketing, to invest in the shiny infrastructure, to have all the different tunnels, versus yours, if it's a family-owned one, you got to spend a bunch of free cash flow to do that, right? But you also have to spend a lot on the marketing spend to just compete with them. So that automatically takes it from an S tier to an A tier for me, all right? Goes from an S to an A tier. Then, the other thing you have to think about is opportunity cost of dollars. Car washes, can they get you 15, 20% annual returns? Can you increase prices like crazy? Can you do a huge marketing sprint to get more customers? Very, very difficult, because consumers are very loyal to a simple car wash if the prices are right. So odds are they're probably going to stick to the same one they've been going to. So doing a competitive go-to-market approach to steal customers, to raise prices, all that is going to potentially hit your revenue potential. And that, my friend, is why I would dink it down again to B tier. All right? That is why I will put it to B minus tier, in my opinion. Okay? Now, you can keep putting your thoughts though. Now, let's move to electricians. All right? Is it S tier? Is it A tier? Is it B tier? Or is it C tier for electricians? Chat, you know what to do. Spam on, you don't have to spam it. Just press the darn thing on the YouTube poll. What do you guys think about electrician businesses? ¿Qué tal, huh? ¿Qué tal, amigos y amigas? What are we doing with our electrician businesses? I ain't gonna give you all this time to pick anyway. We only got 30 seconds on this. We got a lot to run through. Ooh, you guys are fans. Okay. You all kind of think alike. Hey, chat, I like how you think, chat. I kind of like how you think, chat. Hey, all right. an electrician business, someone that goes into a home or a hospital or a commercial business, and you're fixing you're fixing the wires, you're solving outages, you're figuring out you're figuring out like the power needs. It ain't complicated. It ain't complicated, chat. Kareem says he's gonna get these machines from China that spit out rainbows. So, yeah. All right. That might put it to a B+ tier. But you also know we're about to enter some trade wars. So that machine might cost a lot, Kareem. Boris, that's a good point. Good point, Boris. Good point. Right? You got to think about the attractiveness today paired with the attractiveness down the road. All right, chat. When it comes to electricians, we are going to end the poll in 5, 4, 3, 2, 1. Poll is ending. Let's see what we got. Wow. Okay. 46% of you guys think it is A tier. 38% think it's S tier. 8% equally think it's B and C tier. All right, chat. Now, for electricians, most of you all think it's A tier. I actually agree with you. I'm placing it at A tier. Electricians go to A tier. Now, when it comes to why I think it's A tier instead of S tier, is because of one simple thing. We all know, right? Electricians are recession resilient. We're always going to need them. They have huge backlogs, crazy pricing power. You have a good mix of franchises that are doing a lot, but also a lot of family-owned businesses, okay? The one reason why I think it is A tier is because of margin compression, okay? It is so difficult to find trained, licensed, and experienced electricians. The electrical space, whether you're serving businesses, whether you're serving commercial clients, whether you're serving utilities, is facing such a tough labor shortage that it's very hard to find qualified, trained, ready to go electricians. And how do you scale in this business? Investing a bunch into marketing, expanding your go-to-market, and then actually having people that can go serve those customers. And what happens if someone has a power outage, but you tell them you have a 2-week backlog because you don't have enough techs? Are they going 2 weeks without power? No. They're switching, they're churning, they're going to someone else that has available capacity to fit their needs immediately. All right? So while I love the pricing power, while I love the defensibility of the business, it is really, really, really hard to scale because of the labor bottleneck. All right? So good job for you guys. We're actually 2 for 2 aligned on this chat. We're actually 2 for 2 aligned. Next, let's go to e-commerce / software. All right? Kind of bucketing them together. I want you all to say if it's S or A or B or C tier here on the YouTube poll. You know what to do. It's literally one button. You can press that and then press the second button called the subscribe button if you're not subscribed. Lock the heck in, Top Dog Shred Lords. What you got for me? What you got for me for software? What we doing, chat? ¿Qué tal, amigo y amigas, huh? Ooh. Kareem says C tier. Kareem says C tier. Yeah, I kind of cheated. I put them both in the same thing. Let's assume it's, well, nah, I kind of put them both in the same thing, actually. I kind of put them both in the same thing. Good thought, Jack, but I'm sticking to my grids. Put them in the same bucket. And quick hint, I don't like them both. And this is today. Well, no, Boris, SaaS. This is also SaaS. I'm putting SaaS and e-commerce, anything software on all that. And this is for 2026. If you were to do a roll up in 2026, chat. Right? So keep this in mind, chat. This is if we were to do a roll up of e-commerce software businesses in 2026, right now, with everything we got going on. Where would we rank that? All right. S tier, A tier, B tier, or C tier. S tier being absolutely undefeated. C tier being this is absolute dog poo poo. Okay? What do you think? Ooh, good point, Greenback Jack. And good point, Cream. And good point, Boris. 10 seconds, chat. 10 seconds. All right. Dale. All right, so for the e-commerce / software, we're going to end this in 5, 4, 3, 2, and 1. Okay, what are the results? Ooh. 42% think it's a C tier, 33% think it's a B tier, 17% think it's A tier, and 8% think it's S tier. Huh. But when it comes to Kenny Finance, I'm putting this at F tier. Hear me out. We're talking about a roll-up, all right? We're talking about a roll-up here in 2026, okay? 2026. Let me tell you a little bit of something about 2026 software roll-ups. I showed you what happened to Tiny stock, right? Absolutely collapsed 90% since pre-IPO. There's also other big ones like Constellation Software. And I would tell you what, there's like 10 other publicly traded ones and 100 other privately holdcos focused on the digital media, software, e-commerce, SaaS, you name it. And I'll tell you this, the good ones, the great software businesses that are in the roll-up arena that isn't already circled around by the middle market and mega fund private equity firms, and we're talking lower middle market, sub $10 million purchase price, the good ones are gone. And if they aren't gone, you're paying a ridiculous valuation. Okay? So pricing always comes into a factor when you think about doing a roll-up. Next, give me a software business model, an e-commerce business model that AI can't do something for today. Right? What is it? What is it that they can't do something for today? AI can do almost anything. But if it can't do it now, what are the odds that they can do it in 5 years? Because also, in 5 years, what AI can do in 5 years actually influences most of your returns. Because that is when you're thinking about exiting, and people are not going to buy something if AI at that point in time can already do what your business thinks it could do. You have to keep in mind, every time you buy a business, you have a 5-year underwriting story. Every time you sell a business, the next buyer has to have another 5-year underwriting story. So when it comes to anything online, ooh, Jensen Huang ain't playing, y'all. He's coming for y'all next. So I'm putting this software at C tier. All right, but we're keeping it moving, chat. Dental clinics. And if you haven't already, this is a very, very, very healthy reminder, chat. This is a healthy, wait, they're not letting me put another poll. Okay, here we go. Dental clinics, chat. Dental clinics. What are we thinking about for dental clinics? I'm going to put the poll for S or A. What's the next one? B, and then C tiers. Dental clinics. What y'all doing with that? And this is your healthy reminder to take y'all butts to your dentist. Use your health insurance to get your biannual cleanings. I'm not sponsored by your dentist. I just care about your oral health. All right? Lock in. And press the darn button. S tier, A tier, B tier, or C tier, chat. What are we doing? Ooh, live busyness meter would be cool. Wait, that'd be really cool. That's really good. And you see how, CJ, you're coming up with ideas? The pathway to go from like an idea to creation is literally minutes now. Versus software businesses that are charging people, assuming it can be done in months. Right? And if anybody's already invested in these spaces and I've incorrectly ranked your industry, I'm so sorry. It's just my thoughts. And this is for educational purposes. Don't be mad at me. Don't be mad at me. What y'all talking about, Shred Lords? What y'all talking about, Shred Lords? It ain't that complicated. You just press a button. S tier, A tier, B tier, C tier. Vote in the poll. Do you like freaking dental clinics? Yes or no? Lock in. Okay, so dental clinics. I'm gonna close the poll in 10, 9, 8, 5, 4, 3, 2, 1. You took too long. Boom. All right, what we doing? What we doing? Ooh, 56% think it's S tier and 33% think it's A tier. Ooh-wee. Okay, all right. So for dental clinics, do I agree with chat for an S tier? Or do I think it's an A tier? You know what? You know what? I'm putting dental clinics, honestly, into S tier. Dental clinics goes into S tier. And hear me out. I know a lot of you are probably going to be like, oh, it should be A tier. Boom, 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 boom. That's what all the hardcore private equity nerds are going to say. Hear me out, though, chat. I'm putting it at S tier because why? Biannually recurring revenue thing. Sticky customers, clean benefits, recession resilient, good or bad. If you don't clean your teeth, you're chalked. And I'm overdue, actually. I'm actually overdue. Also, there's a good flow of graduates every single year. Every single year, you're not worried about labor issues. And the reason why I say S tier is because if I were simply looking at New York City, California, Florida dental clinics, that'll probably be A tier. Why? Because the good ones are just eating up like crazy. And the multiples that you have to pay are nuts. I would say S tier if you look beyond America. If you look beyond America and look at Japan, Western Europe, Mexico, Brazil, India, Canada. Look at the places that have the largest growing population of middle income and figure out where do they have amazing markets of family-owned dental clinics. Build a little platform in there, and those usually have better entry points than US M&A. Shoo! Hey, chat. That's a quick path to a couple $10 million, y'all. That's a playbook. People everywhere got teeth. You hear me, chat? Literally, people everywhere got teeth. Okay, now, moving on. We are going to see what the playbook is for laundromats, okay? S tier, A tier, B tier, or C tier. Laundromats, the place where you go to literally get your stuff washed. What are y'all doing? What are you doing about laundromats? It ain't rocket science. Everybody's got to wash their clothes. But where do you go? Where do you go, chat? I love how we've turned this chat into a cafecito. And I give all credit to Garrett. Garrett inspired me to turn this chat into literally a cafecito. Hey, this is like a chat capital coffee shop where you just come vibe, rock and roll, and you get your vibe in. You know what I'm saying? You in and out, you get your vibe in, chat. That's how we rockin' and that's how we roll. Matthew Madden, what up, Top Dog Shred Lord? Wait, why don't you buy laundromats in West Virginia? What happened? All right, chat, I'm in the poll in 5. All right, laundromat poll is ending in 5, 4, 3, 2, 1. What was the top dog results? The top dog results, oh my goodness, 46% put B tier, and I absolutely agree. It's literally the exact same thesis as the car wash, all right? They're literally all over the place, limited pricing competition. The only issue that it might slip into C tier maybe is if as more developers are doing replacements, new builds, new construction, most of them are installing laundry units, all right? But not all of them, but some of them, okay? So do laundromats need to exist in 100 years? That's a question in the eye of the beholder, okay? But I agree with chat, and we're going to put that at B tier. Next up, let's talk about plumbing. All right, let's talk about plumbing and plumbing and HVAC. We're going to do two at the same time. Plumbing and HVAC. Is it S, A, B, or C tier? What do you think, chat? When it comes to plumbing and HVAC, I bucket them together because now in 2026, a lot of HVAC companies have acquired plumbing businesses. A lot of plumbing businesses have acquired HVAC companies. Most of them are kind of the same. It's hard to find a roll-up that doesn't have plumbing exposure. It's really hard to find it, all right? Now, chat is literally that simple. You just press a darn button, and that is S, A, B, or C. And after you're done pressing that button, you smash the like button, or you put some good positive news in the chat. All right, there we go. Lock in, Shred Lords. Dirty coal minds. What y'all doing? Plumbing and HVAC. Ooh, Indonesia. Dude, I'd roll some stuff up in Indonesia and the Philippines. I'd roll some stuff up in the Philippines and Indonesia. No cap. No cap, Kareem. Yeah. What we doing, Shred Lords? S, A, B, or C tier? What we doing? Come on, Matthew Madden. Vote in that poll. I know you got it in you, brother. Come on, CJ. Come on, Kareem. Come on, Cool Webby. If you like S, if you put S in the chat, put S in the vote on the poll for S too. We're doing plumbing and HVAC. And don't make fun of my little HVAC and plumbing icons. These are the only free ones with transparent backgrounds, chat. All right, these are only free ones with the transparent backgrounds. What we doing? ¿Qué tal, amigos y amigas, huh? Oh, these last ones are going to be competitive. All right, chat. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. You missed it. Let's go. So, for plumbing and HVAC, 50% said A tier, 40% said S tier, and I actually agree with the 50% of you Shred Lords. We're putting this at A tier. Why? Recession resilient, strong pricing power, crazy market of available TAM to buy businesses that are in this space that are family owned. And the tailwinds are doing nothing but growing with your pricing power, with the services you can roll out. And if you marry the two together, HVAC and plumbing, you're crushing it. Now, why is this A plus tier, not a S tier, Kenny Finance? The only difference, chat, is simply because of the labor issue. It is even harder to find licensed plumbers and HVAC techs than electricians. I think equally the same. But that could be solved with more rollouts of HVAC schools and trade schools and plumbing schools. But the key with that is that they are going to they're going to want to be paid a bag upon graduation and getting their license. And what does that hurt? That hurts your margins. While you think you're crushing it, you absolutely think you're crushing it by raising your prices and handling your backlog. While you're raising prices, your talent is also telling you yesterday's price is not today's price. While you had to pay a plumber $80,000 a year annually in salary, now they want 100. Now they want 120. Now they want 100. Why? Because there's only one of them per city, right? That's over exaggerating. But the labor applies to all trades right now. It is very, very difficult. So I'm going to put that at A tier. But let's move on, chat, and let's talk about something a little creepy crawly. Let's talk about pest control. Let's talk about pest control. That are the folks that go out and kill the spiders when y'all are too scared to do so. All right? And look, I'll tell y'all right now, spiders don't give a crap. Spiders don't give a crap, right? If it's 08, 09, they don't care at all. If it's freaking COVID, they don't care if it's if Nvidia beat earnings or not. Bugs are bugs. So what y'all doing, Shred Lords? Let's rock. Let's rock, Shred Lords. Oh, Kareem's big dog in his way into that one. Kareem's big dog in his way into that one. What you talking about, man? What you talking about, man? Press the darn button, y'all. Press the vote. Press the darn vote, y'all. It ain't that hard. Cada dia. Did I tell y'all the story about every night when I lived in New York in Queens for an internship? I had to kill a cockroach every night with my bare hands in a vacuum. Tough life, y'all. Tough life. Anyway, how's your day going? Ooh, First T says A tier. Kareem says S tier. Beef it out, chat. Beef it out. Respectfully. Respectfully. This is one of the best icons I could find. Pest control. All right, before Cataluna starts to go crazy, let's end this poll in 3, 2, and 1. What we got? Ooh. Well, first and foremost, Kareem, no insects in Germany. Straight cap. There are bugs everywhere, bro. They got bugs everywhere in Germany. I seen bugs in Germany. All right. Okay. Now, when it comes to pest control, you guys 40% say S tier. I actually freaking agree with y'all. You want to know why? Bugs are everywhere. And even though you might think pest control is simply just, oh my goodness, there's a bug here. Let me call the pest control person to come get rid of it. There's actually a better business model that's out here. And my S tier assignment applies to the business model that has annual recurring maintenance and prevention contracts with multifamily units, homes, apartment buildings, commercial buildings, hospitals, big budget, big wallet customers, as well as recurring site visits to do routine checks monthly or quarterly, to do the preventative spraying annually. Those are dog business models, all right? You do got a little bit of competition with some franchises and some bigger ones, but I will say this, Chet. I will say this. If you can find a good one that isn't just answering bug calls, but are actually doing the preventative recurring contracts with diversified industrial, home services, hospital, commercial, apartment contracts and buildings and customers, you can print like crazy. All right? But given the competitive dynamics, I will put it at S-. But nonetheless, Kareem, there are bugs in Germany. And we're putting this one at S tier. All right? Now, moving on to the next one, let's talk about managed IT service. This is kind of like the MSP space, IT services. And if you don't know what this is essentially working with small businesses and running their entire tech backend operations. This is the ability to be the tech team for small businesses that don't have the capital or the time and bandwidth to do it themselves. It's not just cybersecurity. That's one part of it, but it also includes other things like the subscriptions or the cybersecurity or the error tickets, little things like that. But for MSPs and IT services, this is actually one of the hottest plays right now of rollups currently. All right. People are obsessed with this. That doesn't mean it's an S tier or A tier or a C tier or a D tier. I just know there's a lot of activity in this place. But for right now, y'all buying one of these things and rolling it up? Let me know, chat. Press the darn button. Press the darn button, chat. You haven't seen laundromats or pest control companies in the Netherlands? Really? Wait, why I'm on Chanel? We make smart money moves. We ain't spend our whole AUM on this. Get up on my get up on my face. Lo que siento está fuerte. I'm learning Spanish from this song. W, my guy Richard. What we talking about, chat? What we talking about, chat? ¿Qué tal, amigos y amigas? What we doing here? Come on now. All right, chat. So when it comes to managed IT services, all right, the poll is ending in 10, 9, 8, 7. You missed it because I told you to vote. You didn't vote. Anyway, 60% say A tier. 40% say S tier. Ooh, nobody says C or D. Okay. To be honest, I'm putting it at A tier. I'm putting it at A tier. Should he start one or buy one himself? Honestly, if he has the experience and he has the customers, he should explore at least giving it a shot to start one himself via like a one-man shop. Because I'll tell you now, buying these things right now, the multiples are crazy. That's the only reason why. There's a big market, and as cyber becomes prevalent, you need that as well. But here's the issue. The issue is this is like one of the hottest plays where folks are deploying dollars and valuations are becoming nuts. All right. And some of the bigger companies are needing to diversify away from Fortune 500 customers, and they're going into the SMB and small market. And it's becoming more and more difficult to compete if you are a blue chip bread and butter smaller player. I'm telling you right now, the business that I'm acquiring, they have a MSP provider doing their IT. The second that like it's official ownership, I'm canceling that contract. I'm finding a better, more tech-enabled AI or larger one that can do the preventative monitoring and maintenance for us. All right? I'm going to do the negotiations with the software companies myself, right? So there is potentially disruption risk from bigger players, from AI, not in the next 5 years, but maybe like the next 10, 20 years, it'll be shaken up a little bit. But the also issue that I have is that the prices are crazy right now for these markets. The multiples are insane. And these things are low margins, so you can't really lever them up that much. The average IT services business has like a 10 to 15% margin. And that's tough to lever up. All right? Especially if you're trying to big dog your way into some returns, it's tough to lever these things up. All right? But let's talk about something that everybody has to do. And that's taxes. All right? So they're tax advisors. There's a lot of these folks. You drive around Michigan for 5 minutes, I guarantee you're going to find something that says, hey, we can do your taxes. All right? So when it comes to taxes, mom and pop family-owned tax shops, what are you all doing? Is it S tier? Is it A tier? Is it B tier? Or is it C tier, chat? Lock in, put it in the chat, press the button. Let me know what y'all got going on. And let's see if you guys like this. Tax advisory services. Okay? Tax services. What we doing? Don't be scared. It's just a little vote. Use your right. Use your right to vote. Use your right to vote, chat. God gave you a finger to be able to press a button. And you can press A, B, C, or D. Or S, A, B, or C. Obviously, God didn't give me a brain. But press which one you think is it. S, A, B, or C, chat. We got polls on polls on polls. Pause. What y'all think going on with this? The crazy thing is, though, everybody's got to do their taxes. And that's just a fact. Everybody's got to do their taxes. You can't not do your taxes. I'll tell you that. You can't not do your taxes. And the song is Stante by Luca Scott Lucky, one of our faves. Shout out to our copyright-free music. We just out here vibing with copyright-free tunes. But regardless of the tunes, we got to talk about the vibes and we got to talk about the business models that we're trying to roll up here, chat. When it comes to doing your taxes, tax services, you buying this? You rolling this up? Could you make a bag out of this? Potentially. But also potentially not. All right? So I'm going to end this poll in 5, 4, 3, 2, 1. I already ended it. Boom. Here we go, chat. Here we go. Ooh, you all said 46% is C tier. Oh, y'all don't like it. Y'all don't like it. Y'all don't like it. Oh, my goodness. The tax goes to C, and I actually agree with you, chat. I agree with you. Cool Webby says we're one flat tax policy away from eliminating tax preparing businesses completely. That's facts. That would kind of suck. Secondly, I will say though, I was able to successfully do my business and personal taxes solo using TurboTax with crazy help from AI. Crazy help from AI, right? Because what are the tax preparers actually doing? They're answering the questions from the consumer, but they're also just doing the filings. On the doing the filings piece, there's tools for you to do the filings that have become more and more guided, at least here in America. At least here in America. I don't know about international, at least here in America. A lot of guided ones. But then for the things that they can't answer, you bet your butt AI can. Okay? And look, my mama might disagree with me. She used to do people taxes back in the day for the hood. You know? She might agree with me, but I'm telling her, she don't do it no more. But I'm telling her right now, look, you better get a new skill, ma, before you get replaced from AI. All right? So, tax advisors, I agree. We're placing that at C tier, mainly because of AI disruption risk. Like, there's a bunch of them out there you can buy, sure, and you can get a quick buck and make some cash flow for like 3 to 5 years. But you better execute them and exit that thing soon. But then again, when you exit it, you got to have another 5 year of underwriting story to get a good multiple. You know what I'm saying? So, and these things are tough and messy to integrate. I don't know, yo. I don't know. Anyway, we're going to go from taxes to something else that everybody knows about, and it's funeral home services. All right. I talk about a lot of these things in my long form videos. You know, I'm a big fan of these, but I want to see if you all are fans of these. All right. It's not about me. It's about y'all. I'm not voting in this poll. Y'all voting. I'm just kind of assigning it where I think it's best. But funeral services. Are we rolling these things up? Yes or no, chat? Let's freaking cook. All right? Let's freaking cook. Ooh, Consultant 22 with the expert commentary. And hope you're doing well, Shredder. Hope you're having a fantastic start to your week, brother. And great point around low barriers to entry. But Boris, back in the day, that thesis was valid. I would say back in the day it was valid, and I will say probably based on where you are in the Netherlands, that probably is still true. But for right now in America, it's a bleak outlook. But I think in the Netherlands, you might have 10 to 15 more years of runway. So it really all depends, guys, on like geographically where you're based here. All right? It really depends on geographically where you're based. Oh my goodness, first T, that's so dark, but it's so true. It's so dark, but it's so true. Jeez. What y'all doing, huh? S, A, B, or C tier. Press the button. Let your voice be heard. And look, AI ain't touching your burial or my burial. I'm gonna put in my instructions. When it's lights out for me, no AI present. I don't want no AI reading my eulogy. If someone's speaking about my legacy, I don't want them using ChatGPT to write it. I want it to come from the heart, from a real human. And if we ain't got no more humans left, I want my dog present. Barking for the boys. No, my dog might pass before me. No buddy finance. Anyway, chat, it ain't rocket science. What y'all doing with this? Is S, A, B, C, or T, or D tier? All right, what we doing here? And as accurately predicted, you guys got that one right. We're doing S tier with this. Why? Let me tell you why. I'm about to cook up with this, all right? Number one, AI is not doing funeral home services. Number two, most of these are actually family owned. There is crazy fragmentation across this. Number three, you have insane pricing power. Number four, the market thinks you're running out of space. They're thinking horizontally. You get to build vertically because you run out of space. You don't no longer sell the actual burial slots. You can then pivot to selling actual cremation inserts that go into your buildings that you have in your funeral home campuses and services space. All right. And there's so many other things. There's the pre-booked revenue that you can start earning by having people book their things before they want to actually pass away. They want to book their certain slot around their family members or their friends 40, 50, 60 years in advance. So you can build a crazy backlog. Hey, yo, welcome to the fam, all right? I hope you voted in the poll, all right, yo. But, chat, AI is not touching funeral services anytime soon. If you look at the public stocks in the space, super attractive. If you look at the actual private market ones, dude, they're everywhere. They're great margins. And they're selling for okay multiples right now, all right? And that's where I'm putting some of my money at. If I just had a blank check, the first spot I'm looking at funeral home services right now. But we got one more, chat. We got one more. And this one's fun. This is your extracurricular after-school programs. All right? Almost spelled extracurricular wrong. All right? Extracurricular and after-school programs. What are y'all doing? Y'all buying these? S tier, A tier, B tier, or C tier? What the heck y'all think? And for this poll, for this last one, I'm gonna let y'all dwell on this. I'm gonna let y'all dwell on this, chat. What y'all doing here? Take your time, feel inspired, think about the market. After school services. I'm talking dance school, piano school, sports leagues. What y'all doing? Oh, Consultant 22, that's a really good show. I used to see it on the HBO catalog back in the day when it was like HBO Go. I gotta check that back out. That's an OG show, y'all. That's an OG show. What you know about that? Consultant 22. Ooh, Cool Webby don't give a crap about no after school programs. Hey, chat, Cool Webby don't give a crap about no after school programs. Oh, snap. Oh, snap. Oh, Consultant, you said you're old? Hey, look, whether you're old or young, everybody can make smart money moves. That's around here, right? But still, I appreciate you showing up. This is a place for everybody. This is a place for everybody. I don't care if you're 90 years old or you're 9 years old. Everybody welcome here. All walks of life. We all trying to be billionaires. I don't care how you doing it. We getting it done. But I will say, though, you better vote in the dang poll. It ain't rocket science. Extracurricular programs. Putting little Jimmy or little Sarah into after-school soccer, robotics, piano class, AAU teams, art school, little things like that. What y'all doing? All right? Last 10 seconds to vote in this poll for extracurriculars, and it's the last opportunity to vote in our private equity roll-up tier ranking competition. Let your voice be heard, chat. Use your right. Use your right to vote. What we doing here? What we doing here? I need $1 billion. All right. Last chance, and we're going to end the poll in 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. What we got? What we got? Whoa, it's a tie between A and B. This is our first tie, chat. It's our first tie. Wow. All right. So it's a tie between A and B tier. If it was up to me, chat, I'm actually putting it within the A tier. I'm actually putting it within A tier. Now, hear me out. Maybe a handful of years ago, it was S tier. In a really good economy, you targeted some that were private in wealthier neighborhoods. Those things are recession resilient because they care a lot about the kids' after school time and development, intellectually, sports-wise, arts, creativity, all that. Parents really care about that. The thesis really only plays if you're in a good market with wealthy parents. That takes your TAM from 100 cities to like 20, right? Because in low-income families, when they're struggling to pay rent and eating, are they paying for gymnastics? Probably not, right? So it limits your TAM to just the super wealthy neighborhoods. And this thesis has been around for quite some time. So do you think the universe in 2026 of available assets in the wealthier communities, do you think that they're everywhere? And do you think there's a bunch of them? Not really. So the ones that are left, you're probably paying a ridiculous multiple. So I will put that at like B+-ish tier if it's in the US. But given we're on a global base and we got a global subscriber base, and if you're not subscribed, smash that darn like and subscribe button. I'll put this at A tier because internationally, the theses are still 3 to 5 years behind. And I think there's some money to be made internationally in growing middle income and wealthier cities within international countries. All right, chat. So that is what we have in our S tier. We have dental clinics, pest control, and funeral services. Get up and get after it, Shred Lords, and get after some of those. But ranking it down a notch. In our A tier, we have electricians, plumbing, HVAC, IT services, and extracurricular after-school programs. Now in the B tier, where we spoiled our appetite a bit, we're putting the cookie cutter kind of everywhere, low moat, car washes and laundromats. But then the ones that we just really don't like, we're not really big fans of, that's the IT services, and that's the tax advisory services, chat. All right, so there you go. That is the tier ranking. Take it or leave it. All right, you put in the comments down below if we are absolutely wrong on some of these, and all opinions and all thoughts are welcome, chat. All right, but I'm just this is published. All right, we're publishing this as is. Come at me in the comments if you want, but that's how we rolling. All right, that's how we wrote. And well done, chat, on this vote. I was aligned with 90% of those, but that just shows how smart you guys are. You guys cooked. You guys freaking cooked. Let's roll. Let's roll, chat. Let's freaking roll, chat. Tier ranking complete. How y'all feel about that? Y'all agree or disagree, huh? I think everybody's pretty aligned. It's kind of like, more importantly, what I want to educate you guys on is just like the ones that were out there, the ones that existed. Like some folks don't even know that some of these things exist. I just want to make sure you guys knew about the ones that actually existed. You know what I'm saying, chat? So that's there. Let me check on one of my favorite stocks. See, one of my favorite stocks is doing. So my favorite stocks we saw yesterday. Instead of buying those things, you can just buy Casey, which is these trucker stop retail stores. It was up today? Good, good, good. This one's nice. I hope somebody's pitching this. And I told you guys how we're going to change the chat capital perspective, right? Or chat capital format to be more March Madness style on Friday. There's going to be rounds for different assets to be pitched into the portfolio. So it's going to be different rounds and allows for us to have a little bit more price discipline and little things like that. So I'm going to put some more information in the Discord on that. So if you're not in the Discord, get y'all butts in the Discord. But chat capital pitches are coming this Friday. So that'll be exciting. That'll be banger. Do not miss out on that because we're about to be talking straight goop. It's about to be crazy. It's about to be crazy. It's gonna be a little competitive too. Hey, but that's what we're here for. Make smart money moves, chat. You know what I'm saying? You know what I'm saying? That's how we were rocking, and that is how we're rolling. All right. All right, chat. Kenny Finance has to go lock back into holdco mode. We got proprietary meetings in 20 minutes. I got to prep for. It's NDA privy. Sooner or later, I'm gonna start having all these on stream after we're closed and stuff. But, you know, we got some good updates on the holdco. We got this new person that was joined the team for the Portco, and she's doing really well. She has her first week review. I ain't messing around. We're doing first week reviews. And then after the first week review, we're gonna have a 6-month review. And then after that, we're gonna have a 12-month review. Just see how she's doing. And if she's not a fit, we're gonna part ways respectfully, quickly. But we're also gonna see like what kind of resources we can provide to get her up to speed. Because having good hires is a great return on invested capital to improve margins, to increase revenue potential, and little things like that. So don't worry, chat. Post close, we're gonna have so many exciting things that I'm gonna work on, like screen share and show you guys how I'm like growing these businesses we're acquiring. But as of now, I signed a document that said this deal's private, you know? So anyways, I gotta go cook. I gotta go lock in. And I'm about to listen to our chat capital playlist while I lock in. But I hope all of you all had an incredible start to an incredible week. Like, I don't know what you're working on, whether you're in school, whether you're working, whether you're building, whether you're recovering from something. I just want you to know you're not alone in this. You got a community of people that are supporting you in any endeavor that you have. Literally any endeavor. I don't care if you're in the Netherlands, if you're in Kenya, if you're in India, America, Latin America. If you got capacity to build and hustle, you got a space here. You know what I'm saying? So I'm incredibly proud of the community that we're building, the engagement that we have, the intelligence that we have. And what's fascinating is literally, it's like day 54 or 5, which one. Every single day we've streamed, at least I have left stream learning something new. And what happens if you learn something new every single day? Inevitably success. Inevitably success, right? Today I learned about options writing. I learned about different roll-up rankings. I learned about HBO cat. I learned about general stores, all these kind of things. And if you just learn every single day over the long term, you are bound to be abundantly successful. And that's the only purpose here, is to learn every day and do it around people that you like and trust, and to freaking vibe out with Chat Capital Cafecito. That's the vibe, baby. That's what we're doing here, all right? So chat, take care of yourselves. Look out for each other. We are the Shred Lords. We're out here making smart money moves for the long haul. And I hope that Greenback Jack understands that day trading might not be all that, and he simply can just buy some index funds and hold it for hundreds of years for his last name, and he can continue to cook and make smart money moves. So take care of yourselves, take care of each other. Peace and love, Shred Lords. I will catch you all literally tomorrow, and let's keep cooking, all right? Dale. Once again, perfect timing with the ending of the song.